Last month, the US Department of the Treasury released the Treasury International Capital (TIC) report, showing that Japan decreased its holdings of US Treasury bonds by $37.5 billion, ending a 6-month streak of increases. Some analysts suggest that after Japan ended negative interest rates in March 2024 and the yen continued to weaken, there were interventions in the foreign exchange market and the selling of US bonds at the end of April 2024. In March, the Federal Reserve maintained expectations of 3 interest rate cuts within the year, causing US bond prices to rebound. In April 2024, economic data showed that US inflation remained high, reducing the possibility of a short-term interest rate cut by the Federal Reserve. US bond yields briefly touched the highest level in 5 months, driving the US dollar index higher. Japan had the largest reduction in US bond holdings, followed by Canada in 5th place with a reduction of $24.7 billion. Before I proceed, I encourage you to consider liking the video and don't forget to share your views on the topic in the comment section below. Your feedback is invaluable for us and a wider audience around the world. Belgium, ranking 7th in total holdings, reduced its US bond holdings by $4.7 billion to $312 billion. Other than these countries, a good friend of the United States, Saudi Arabia, ranking 17th in total holdings, reduced its US bond holdings by $0.5 billion to $135.4 billion in April. On the other hand, China's holdings of US Treasury bonds have been consistently below $1 trillion. In 2023, China's net holdings of US Treasury bonds decreased by $50.8 billion for the year. Today, China holds its lowest US Treasury bonds in history, about $770 billion. Also, China's foreign exchange reserves at the end of April fell by $44.8 billion to $3.2 trillion, a decrease of 1.38% compared to the previous month. Now, Japan's Norinchukin Bank is planning to sell more than $63 billion of its holdings of US and European government bonds during the year ending March 2025, as it aims to stem its losses from bets on low-yield foreign bonds, a main cause of its deteriorating balance sheet, and lower the risk associated with holding foreign government bonds. The bank's net loss for the year ending March 2025, previously forecast to top 500 billion yen, will rise to the 1.5 trillion yen with the bond sales. We plan to sell low-yield foreign bonds in the amount of 10 trillion yen or more, Norinchukin Bank CEO Kazuto Oku said. The bank invests in securities out of funds deposited by agriculture, forestry, and fisheries concerns. The CEO of the bank, Kazuto Oku, further said the bank acknowledged the need to drastically change its portfolio management to reduce unrealized losses on its bonds, which totaled roughly 2.2 trillion yen as of the end of March this year. Oku explained the bank's intention to shift its investment, saying, "We will reduce sovereign interest rate risk and diversify into assets that take on corporate and individual credit risk." As of end of March, Norinchukin had approximately 23 trillion yen of foreign bonds, amounting to 42% of its total 56 trillion yen of assets under management. According to the Bank of Japan, outstanding foreign bonds held by depository financial institutions amounted to 117 trillion yen as of the end of March. Norinchukin is a major institutional investor in Japan, holding roughly as much as 20% of the total. Interest rates in the US and Europe have risen and bond prices are down. This reduced the value of high-priced, low-yielding foreign bonds that Norinchukin purchased in the past, causing its paper losses to swell. Because the bank believes interest rate cuts in the US and Europe are likely to take longer than it previously expected, it will try to significantly cut its unrealized losses by selling foreign bonds in fiscal 2024. It plans to sell over 10 trillion yen or 63 billion US dollars in foreign bonds in addition to its normal trading activities. The bank is now considering investment alternatives, including equities, corporate bonds, corporate loans, and private equity, as well as securitized products such as corporate loan-backed securities and mortgage-backed securities. By diversifying its portfolio, it aims to prevent unrealized losses from expanding to the point where they become a concern for management. It will also try to replace some low-yielding foreign government debt with other such bonds offering highest interest rates. According to the US Treasury Department, Japanese investors held 1.18 trillion US dollars of US government bonds as of March, the largest slice among foreign holders. Massive sales by Norinchukin could have a sizable effect on the US bond market. Japan's presence in the United States bond market has greatly diminished over the years. In August 2004, Japan owned 18.2% of all Treasury securities outstanding. That's now barely 4%. This reflects a broader trend. China once held 14% of all outstanding treasuries but now holds less than 3%. And foreign central banks' share of all outstanding treasuries has shrunk to 14% from a record 40% in June 2008. Japan's holdings of foreign securities dropped sharply in May, indicating that the government likely financed most of its recent record currency market intervention by selling treasuries and other foreign securities, and still has ample firepower to step into markets again. In the US Treasury market, the net inflow of international capital cross-border investments in April was 66.2 billion US dollar, significantly lower than the previous value of 102.1 billion US dollars, with foreign private funds having a net inflow of 44.2 billion US dollars and foreign official funds having a net inflow of 22 billion US dollars. While foreign exchange reserves are declining, China continued to increase its gold holdings for the 18th consecutive month, with a slight increase in gold reserves to 72.8 million ounces in April. According to the World Gold Council, global central banks of different countries increased their gold reserves by 290 tons in the first quarter of this year, continuing to demonstrate a strong buying trend of gold. Amidst market volatility, the central banks of Turkey, China, and India are leading in gold purchases globally. But how the selling of US treasuries by foreign countries will affect the US economy? Top US treasury holding countries' decision to sell US treasuries will have significant impacts on the US economy. Selling a substantial amount of US treasuries will definitely increase the supply in the market, leading to a decrease in their prices and increasing yields. Due to constant demand and increased supply leads to a price drop as well as increasing yields. Further, higher yields on US treasuries will lead to increased borrowing costs for the US government with higher interest rates. Also, the US Federal Reserve is facing inflation, and an increase in treasury yields will further complicate the economic situation in the United States, leading to higher inflation. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.